Good morning, everyone. This is James from Dividend Stock Talk, where we talk about investing in dividend stocks for weekly and monthly cash flow. I know it's been a while since I made a video, but let's see what we're doing today. Today is Thursday, February 15th. Tomorrow's Friday. We have expiration date for the options. So we're going to jump in and see where we are. January was a really cool month. However, February, not the way I like to see February going. All right, so our dividend capturing, where we capture our dividends and just move on to the next stock. We try to grab at least a 1% return per month. We are actually not looking very good with that one because of the stocks that we got into took a turn for the wrong. So don't worry, I'm not panicking. I'm just saying that, we buy and we're going to collect the dividends. And that's don't get me wrong, it's great. However, I'd like things to, buy it, turn around, sell it for profit. But we are just a tad bit off. All right, let's quickly look at ADT. That's the first one on our list. Come on. All right, ADT, we bought it back in January, and then she tanked. Look at that. We bought it, and then she tanked. She went from, okay, let's go. Starts out the year at 62. Quickly finds a trading range around 69. Between 63 and 69, goes sideways for about 7 months, and then jumps up to hit the high of the year somewhere up in the 86 area. Traveled in the 84 range for a couple of months, drops back down, hits 79, and travels there for a couple of months. Now, just so happens that in the middle of January, this thing tanks from 82 down to 62, where we are now. So we've got 600 shares. We collected the dividends, which is nice. But seasonally speaking, let's quickly find out that says. Seasonally, this thing starts out low in January, then moves up till February. We could probably see it starting to level off a little bit higher somewhere toward the end of February, March, and then go basically sideways for the whole summer. I really like to get back out of this one and then dump into a different stock before we lose too much time, our trading time. Okay, so let's look at AZZ real quick. AZZ, well, let's go back to standard chart so you can see what she's doing. She started out the year right at 59, traveled sideways for a couple of months, and slowly dipping down. She hit 47 back in November, made a little bit of a peak at the beginning of the year, but she continued her downward turn to 42, where she is now. We got 1,000 shares of AZZ at okay, that's not what I want to see. At 47.20. So we're going to collect a dividend on this and then going to jump ship and hopefully get out before she tanks anymore, if she tanks anymore. But we're going to hold on to it and collect the dividends because they are giving a good return. SLB started out the year at 82, drops down and continues to go down so she finds a low of the year at 61. From 61, she bounced off and tries to hit back up to the 80s. Didn't quite make it. She got there at the end of January, which is where we got in at it, and then she decided to go back down to 65. So SLB, we're going to be holding on for a while. As you can see, the three positions that we're in all went down to a tune of $30,000. Not a lot, but that's 3% of 30%. Yeah, it's 30%. So we're going to hold on, collect the dividends, and then move forward. It doesn't make me happy camper, but it is what it is. Now, the option side, let's go take a look at the options. Now, last week, if you remember, we had a whole bunch of positions. Take a look at this. We had all these losses all in one week. Because in January, we had nothing but wins, which was great because we had a 9.5% return just for the month of January. And what happens the first week of February? Boom, look at this. All these losses popped up all at the same time. 3M, I can't believe 3M, $9,000. What was I thinking? Anyway, We got in a bunch of these positions last week, and we mostly lost money last week. But this week, we ended up buying AFL, Aflac, and Applied Materials. So what we did, rather than sell them and take the profit, we decided to take more of a profit by selling covered calls. Now, as you see, we did that. The stocks went back up, and we collected the premiums, which, don't get me wrong, that's great. I mean, that's what we're doing this for in the first place. However, we have two positions. Let's take a look at them. Aflac, AFL. Aflac started out the year last year at 71. A nice upturn. This thing continually going up, up, up. And then she hits a high of 91. And has a little bit of a pullback. This is where we get into this thing. It's not working. Okay, well, here we are. She hit a little low right here at 82, bounced back up to 87. Where are we with Aflac? All right, we got Aflac at 84, so we're basically going to stay into that one. And we sold 50 contracts at 108 for the 84.50. So we're basically getting out for the exact same money that we got in at. And we're collecting about $4,000. Well, with Aflac, we're collecting about $4,000. That's lovely. Okay, so kind of makes up for the loss we took last week. All right, Applied Materials started out the year at 35. A nice upward movement. She gets into the 44 area. She travels there for about 5 months. And from there, she just makes a continuing journey to the high of the year, $60. Now, at 60, she pulls back. It's like some profit taken. Jump back in because she seems to be sticking there at 60. Okay, tries to hit 60 again, but only hits a 58. Drops back down. Last week, we ended up buying it. Where are we with Applied Materials? We ended up getting it at 48. We sold 50 contracts for someone to buy it from us for the exact same amount of money, for $1.75 per share, which at this moment in time comes to a tune of $13,000. So we ended up January at 9.5. Now we're halfway through February. We got knocked down to 7.1, which, don't get me wrong, it's still great. It still gives us our average of over 1% per week, which is what we're looking to do. So all that being said, this is James from Dividend Stock Talk. You guys have a great day. We'll see you later on this week to find out exactly what our two positions are doing. And we have so many more that are good quality companies that are ready to go. 16th, we'll be looking way into here. As you can see, we have Johnson & Johnson. That I believe is Dividend King. That's great. Who else do we get? Qualcomm, Dove, AGNC, AGN. Who do we got? Come on, MOS. Who's MOS? The Mosaic Company. All right. Mickey D's. Oh, you can't pass up Mickey D's. That's a great one to get into. Goldman Sachs, Fluor Corporation, CSX, PAC. That's Bank of America. Bank of America. Pepsi. Who do we get here? NOC and SU. NOC is Northrop Grumman. Ooh, can't go wrong with Northrop Grumman. So we're going to take a better look at those later on tonight and see if there's anything we can do. But all that being said, you guys have a great day. Happy trading. You know what? If you have any questions, if you need me to look at anything, I'm here to help. So put your questions in the chat box down there. Send me a question. I'll take a look at it the next video, and we can all make more money. Anyway, all that being said, this is James from Dividend Stock Talk. You guys have a great day.